So in this video, I'll be explaining the smart money concept, SMC, which comprises of the break of structure and the choke, the BOS and the choke. The BOS stands for the break of structure and the choke stands for the change of character or reversal. Okay, so let's talk about the break of structure. Let's say in our uptrend, which you can see here, where it is forming a higher high and a higher low, right? You can see it here already. I pull it out. This forming higher high and higher low, higher high, higher low, higher high and higher low, higher high, higher low, higher high, higher low, continuously, right? So now, how do we know that there's a break of structure in this situation of an uptrend? How you know that there's a break of structure is because after forming a higher high and a higher low, it breaks through this higher high and goes above it here, right? You can see it breaks through it and goes above it like this, instead of maybe staying equal or below. It went above it. So once it went above it like this, once it goes above it like this, we call it the break of structure. So this is the previous higher high, right, which is here. So it breaks through it and goes above it and form a new higher high. So here, right, is the break of structure. So I'll just name it the break of structure so you can see it. So call it the BOS, right, which is our break of structure. Similarly, if you notice, after it breaks it and goes to a higher high and form a new higher high, it came back to form a new higher low, right? Then instead of stopping here or continue going down, it went up above it, even higher than the previous one, you get, which makes us to get another BOS, right? Makes us to get another BOS here. Exactly this place, right? So it makes us to get another BOS. Let me just copy this and paste it. It makes us to get another BOS right here. Similarly, the next one and form another BOS here. You can see it. I hope you're understanding it. So that is just it about the break of structure. The previous one breaks above the former higher high. That is when you have a break of structure. You see here, if I want to say the next break of structure is here because this breaks above here. So let me just copy it and put it there for you to see. There's a break of structure here, right? There's another break of structure here. So it forms mostly in a trending market. There's a break of structure here. So if, for example, we want to tag this next one another break of structure, it will come this way. It will come, let's say it stop here, right, because it is already above our previous higher high. So it came back like this, right, and went above it again. So here we'll say there's a break of structure around this side. You see, around this side there's a break of structure around this side. So That is how to get to know your break of structure. So similarly, in the downtrend, you can see it here, where we're having a lower high and a lower low, right? A lower high and a lower low, a lower high and a lower low, just like this, which we know it's a downtrend movement. Any place you get a lower low and a lower high, it's a downtrend movement, right? So how do you know that there's a break of structure here? Is because it breaks through the previous lower low and goes down below it. We have a break of structure. Immediately it breaks through this our lower low here. Let me remove this one here. Immediately it breaks through here. You see, it breaks and passes through here. We know we have a break of structure. So that is just it about this break of structure. BOS. You see, it came in and break it, right? So we tag it as a break of structure. Here, similarly, the same thing happens here. In this place, this one came in and break below here. So we have a break of structure here. That is how it will continue, except when we want to have a change of character. So now this takes us to our change of character, the choke or the reversal. And most of the time, this is where the big banks use their initiative to enter the market and change the direction of the market to where they want. So we as the retailers, once we notice that there is a change of character, that is where we to enter the market. Actually, using some confluences like our candlestick pattern and our demand and supply zone, or our support and resistance zone, right? So let's say this market was just giving us a break of structure going up and down. Then instead of creating another break of structure like this, we're expecting it to come back here, right? Then go back like this, right? After not breaking this structure, we're expecting it to continue going up, right? So instead of that, we now saw something like this. You see, when I saw something like this, so this is what we call a change of character, because it came back and broke through this our previous lower higher low here. This is our higher low, right? Let me put it so you can see it. This is our higher low here. So instead of it to not to get to our higher low, it came and broke through it like this. So this is where when I got the break of structure. So similarly, in a downtrend, when the market is forming a lower low and lower high, right? Forming a lower low, lower high, just like this. Then all of a sudden, instead of it to break through the lower, to continue forming a lower low and lower high, instead it breaks through this lower high and went up like this. So you can see that there's a reversal here, or you call it a change of character. That is where the change of character come in. So you can see it was in a downtrend before, like this, right? It was in a downtrend like this. So instead of it to continue forming a lower low, this time around it didn't form a lower low, but rather it breaks and continue up. That is when we now say that there's a change of character in the market. And mostly the big banks and the big boys uses this period to enter the market. Here we'll say that the sellers are now as getting out of the market. Now the buyers are in the market, right? So that is where the change of character come, or the choke. You can also call it reversal there, depending. So many traders call it different names, but you can call it a reversal or a choke, which is the change of character. So now what we'll do is we'll go into our main chart to see how it looks like there and how we can make profit out of it. So let's say the market is in a downtrend, right? You can see it's forming a lower low and a lower high, right? You can see it here. There's a lower low here. It forms a lower low here, a lower high here, right? And a lower low. You can see it's forming a lower low and a lower high. That is when you say it is a downtrend, right? I don't need to go deep again because I already explained all this part for you. So you can see it, it's coming in a downtrend, right? Where we can see our lower high and lower low, lower high and lower low, right? So let's see, it's forming lower high and lower low. Where we will have a break of structure. Okay, now you see it was forming a lower low and lower high, right? But here there's a break of structure here, because instead of it to continue forming a lower low and a lower high, it breaks the previous lower high, right? Let me mark the place for you to see. So you see it breaks through our previous lower high, right? So what will you do now when you see a situation like this? That is why it is very important to always mark all these your zones in trading, because it helps a lot. Always mark your zones out. Always mark your zones. They are very important. Your lower high and your lower lows, always mark them out. Always mark them out because they are very, very important. It will give you the market idea, the market structure, so you don't trade against the market. You'll be in check of what you are doing. So immediately you notice that, okay, this has broken through our previous lower high. What are you supposed to do? You mark out your zones, right? Immediately you mark out your zones. Okay, let's say this is your zone. Why? Because if you notice, it touches this place some multiple times and it was rejecting it, right? And here was the last lower low it forms, right? It couldn't pass through this place before it went up and break it, right? So you just mark out your zones that, okay, this was our previous lower low and here was our previous lower high, right? Okay, our previous lower high was around this side. So now this market broke through this previous lower high and went straight up like this, right? Which we said, okay, if it breaks through this place, we have the change of character. That is when the change of character comes in. right? That is when the change of character comes in. So, what are you supposed to do in these situations? This place signifies that the sellers are going out of the market. Now the buyers are present in this market. And the big banks usually use this to trade also, the smart money concept. You see? So the buyers are now present in this market. But mind you, there are some times where you see a fake breakout like this. That's why you don't need to rush. You get, there will be a time where you see a fake breakout. They just want to go and clip people's stop loss and so that is why you don't need to rush. So now, since this market has broken our lower high, and we are expecting that, okay, since this market didn't reverse to our lower low, which is around this side, right? Let me just mark it for you to see. Okay, these zones here are our lower low, right? All this side are our lower low. So, and this market fails to come back to this our lower low, but rather it broke our lower high, which it has not done for some time. If you go back to the market trend, it was in a downtrend. That is why we draw this our trend line, right? So what are you supposed to do in this situation? You are to enter for a buy market. This is an opportunity for you to enter for a buy market and follow the big boys, the big banks, and to trade, right? So you will be entering for a buy market. As soon as you notice this, then you put your stop loss around this side, just beneath the lower low. Then your take profit should be like 2 times above, 2 times your stop loss, right? Or even 2.5 times your stop loss. So let's say your stop loss is like 30 pips, right? So your take profit should be 2 times your stop loss. That means your take profit will be around 60 pips, or 2.5 times. That is around 70, 80 pips. So let's leave it at 60 pips, for example. So let's say this is your take profit. So, and you entered for this market. Let's see how this market will play out for us. Remember, you marked your zones, right? So you see, this market has hit our take profit. It hits our take profits. You see, this market hits our take profit. So this is just it about the change of the character and change of break of structure. So similarly, in an uptrend, you apply the same procedure. Let's maybe take one example in an uptrend so you understand better. So in an uptrend market, let's say we came into the market and we noticed that, okay, this market is forming a higher low and higher high, right? Forming a higher low and higher high. What are you supposed to do in such a market? Once you notice that, okay, this market is an uptrend like this, you see, we'll pull out our trend line just to make sure that, okay, this market, yes, is really an uptrend, right? And we start marking our zones, right? Okay, here the market forms a higher low. These are all our higher lows, right? It was forming higher lows, right? The market was forming higher lows and higher high, right? It was forming higher lows and higher highs all around like this. right? You see, the market was busy forming. You remember we discussed this before, right? So all these, if you notice, they are higher than the previous ones. You see, here are higher lows. These ones down here are the higher lows. Here are the higher highs, right? So they keep forming higher highs. The only time we say, okay, there's a break of structure is when it changes to a downtrend or reverses to a downtrend by breaking the previous higher low. Instead of going up to break the previous higher high, it will come down and break a previous higher low. So we'll just keep watching the market to see how the market is forming, right? So we'll be watching this market to see how it's forming, right? So once it breaks through our higher low, so you see this big candle just broke through our higher low, right? So what are you supposed to do in this situation? You don't just enter the market. You will now draw out your zones. This is the right time for you to draw out your zones. It has broken through your trend line and also your most previous higher low, right? So this was our higher low. It forms another new higher low. This was the previous higher low, right? So but now it forms a new one entirely by breaking this structure that it was forming before. You see, it was forming a higher low, but it breaks that structure to down, which is no longer an uptrend. It signifies that the buyers are going out of the market right now and the sellers are present right now. So the big banks are around right now to enter for a sell, right? So now, what are you supposed to do? You're supposed to now draw out your zones, right? You pull out your zone. Where was our last higher high? You mark out your last higher high, which was around this side, right? It was around this side was our last higher high, right? So you just mark out your zones. As long as the market didn't go back to this zone and break it, then you should be looking for a sell entry. You can even go down to a lower time frame to look for your entry positions, right? So once you mark out your zones, you go down to a lower time frame, because currently we are in the 4 hours time frame. So you can go back to a lower time frame to look for your perfect entry positions. So you mark out your zones and we'll be waiting for opportunity to enter the market. As you can see, this market has changed direction. It never goes back to our zone, and this was the last higher low, right? This was the last higher low. So we marked out our two zones to see if this market will go back, because sometimes there is a fake breakout. So if it is a fake breakout, it will clear people's stop loss. But that's why we don't need to rush and enter into the market. You need to be very careful. You don't need to rush. So now what are we supposed to do in this situation? Because we can see now it's no longer forming our higher highs again. It has now started forming a lower low. You can see has started forming a lower high and a lower low. These two right here are a lower high and lower low. This is a lower high. You can see here right there is a lower high, and here too is a lower high. Here is another lower high, right? So, and also lower lows, right? So since this market is forming lower high and lower low, what are you supposed to do in this market? We have a change of character here now, because if you notice, we're in an uptrend, like we marked it before, we marked our zones before, right? So now there's a change of character here. We are supposed to be entering for a sell market. We follow the big banks to enter for a sell market as soon as we notice this change of character, right? So we enter for a short around this area. Like I told you, your stop loss should always be around here, your zone, just maybe like 20 pips to 30 pips your zone, right? So you can put it 30 pips depending, and your take profit should be 2 times your stop loss or 2.5 times your stop loss. Always take note of this. Your take profit should always be 2 times or 2.5 your stop loss. So let's see how this market will turn out to be if we entered for this market. There's no space. I would have, let me minimize this so I can increase. I can just increase it for you to see. We say we should take 2 times our stop loss. So let's just see how this market will play around for us. So you see, this hits our take profits. This market hits our take profits, right? You see, so it's just a simple rule that the big banks use. It's just a smart money concept. They are brain smart in this game, so we need to follow them if we want to be profitable in this industry. We need to follow the big banks too. Since we are retail traders, we don't have money to move the market the way they can move the market. So we always try to follow the opportunities. We enter, we call it sniper entries. We enter the proper time to take advantage, maximum advantage of the market, right? So we can make good profit out of the market. So this is it about this, the smart money concept, the change of character, and the break of structure. Please, if you enjoyed this video, kindly give us a thumbs up. If you have not subscribed to this channel, please subscribe to this channel, share this video, like this video, so that others will benefit from it. Thank you, and see you in our next lecture. Kindly drop comments on what other topics you want us to discuss in our next lecture. So we'll go through your comment section. We'll go through this comment section and pick your comments and talk about the ones we think you ask us to discuss. We'll elaborate on them. Thank you, and bye-bye.